Don't let the first green candle you see fool you. Now, we've seen this before where we have a one-day rally that puffs up like a balloon and then vanishes. Now, just like the last several weeks, I'm not chasing that single green candle or headline optimism, and I'm not really going to assess for bullish opportunities until we're above 5700s. And let's look at the charts. So this bounce that we see from Monday, this doesn't fool me. We've seen it before where we have this gap down trade higher. Again, you can pretty much pick 3 or 4 instances over the last couple of weeks where this has happened, where the market moves one way for a day, possibly 2, and then reverses back into the trend. So until I'm above 5700, I'm going to consider the bear flag intact. If we go above 5700, then this will have evolved into what could be a double bottom. Again, it's one of those things, this is the thing that the textbooks don't tell you, is the evolution of price. The talking heads in the media, they're going to be losing their minds over double bottom and optimism and everything's great. And then the bears, they're looking at this as a bear flag. Like me, I'm looking at it as a bear flag. But until either direction has been proven, I'm not going to worry about whether I'm right or wrong. It's like, I'm bearish below 5,500, I'm bullish above 5,700. It's going to be one or the other. And the downside to all trading is we won't find out until afterwards. So anyway, with these reversal days, they have been quite common. And again, just putting those same figures over onto the my usual 30-minute charts. Get my drawing widget to work. There we go. So 5700, again, that's the, I'm going to say the failure point of the bear flag. If we're above that, that's really where Friday's tip over started. So again, a bull move above there. I'm going to be bearish below and definitely be looking for add-ins below 5,500. Again, I've taken my bear swing on. Again, with the benefit of hindsight, a little bit preemptive, a little bit early, but I'm okay with it because the way that income trades work is I don't necessarily need to be right initially because we're not being stopped out in that traditional sense. I can trade my viewpoint without having to worry about being precise on an entry and a stop loss like we would do if we were trading stock or futures. So it's a lot simpler in that regard to income trade. And, you know, on that note, I actually had, which you can read on the blog, the saga, a trade somewhere around here at that level, and it was about the 20th of last month, March. Again, initially that trade was placed, it rallied higher again almost immediately. I didn't get an opportunity to hedge, I can't remember why, to be honest, and I'd written that trade off and almost forgotten about it. So Monday's sell-off did us some huge favors as price just pops lower and just hits that exit target quite nicely. And here's the details with the broker statement on. And this is a pertinent reminder that if it ain't over till expiration, and sometimes you know, we just get this last minute push in the right direction just to bring it home when we least expect it. The fun fact, in 1999, a 15-year-old stock trader named Jonathan Lebed made over $800,000 pumping penny stocks from his bedroom before the SEC came knocking. So the markets are always going to reward confidence. It doesn't matter how old we are or how young we are. If you've got a process, whether it's legal or not, having the confidence and consistency, and maybe in this case a little bit of cunning, to put the trade on and be the trader that sticks to the rules, who's going to last beyond the knee-jerk reaction of price movements. If you want a system that doesn't miss, that helps you ignore the noise, follow a system, and take the trades and let them do the talking, then click the link next to this video. You'll be taken to a free training where I outline one of my favorite money-making patterns. So if you click the link, I will see you over there.